Who in Asia outperforms and underperforms when yields rise?
Okay, so what you're saying is that you have two things, and you have the yen, the yield rising, and then you have the S&P market. And when you have the combination of the yield rising and the S&P also being resilient, then you tend to see the Japanese equity market doing rather well. Now you are in a context where the yield curve has flattened or has even inverted, and in that context, you do not wish to hold the most cyclical part of the market in Asia, and so that means that market like Korea, market like now Japan, are going to become more vulnerable in our view. And on the other hand, the market and the sector and the themes that can deliver some sustainable income, some sustainable dividend, are the ones that could be in better shape. So think of the Taiwan market, for instance. So Taiwan versus Korea, we could expect the return gap to the gap to widen, for instance.
How vulnerable are all of these markets given the rise in energy prices, in commodities prices? These are big energy importers.
Yes, so you have a very simple line in Asia. So you have a number of countries, Australia, Indonesia, Malaysia, they are net energy exporter, and you have the rest of Asia, they are net energy importer. What we believe is at least in the second quarter and probably beyond, you have a number of markets that are benefiting from this high price of the commodity exposure. Indonesia first and foremost, and that's one very interesting market, not only because of the commodity exposure, but also because it is an economy which is reopening, where the growth is catching up, where you see the EPS growth recovering. So you have a number of markets that are going to do well in this context, and the one who are an energy importer could be in a little bit more complicated situation. But what I would say is also very importantly, it's not only the price of commodity, but what we have from the US, the shape of the curve, and how it's going to impact the different sector and countries in Asia.
Frank, are you keeping your exposure to China?
Yes, we do. The month of March has been hugely eventful for Asia. For China, you had first this equity route, which put the offshore equity market to a distressed valuation. Then you have the State Council statement saying a lot of things that the market wanted to hear on stable financial market, on a more easing of fiscal policy and monetary policy, on the regulatory tightening coming close to the end, with one thing, which is a zero COVID policy, which is still staying in place. So that's why what's happening in Shanghai is a very important event also for the market. And if we see any form of relaxation of the COVID policy in the second half of the year, then you have a risk on China, which would be an upside risk. So given the extremely low valuation on the offshore market and the risk of reacceleration that we could see in the second half, we do keep the exposure on China assets, including China equity.
Do you prefer onshore and offshore, and which sectors do you think might benefit, particularly as we heard from the government yesterday just pledging for stable growth and support?
Yes, so that was that was a potentially important element. So we see some recapitalization of the weakest financial institutions. So that is something that goes into the direction of a more stable market from a valuation perspective. Even after some partly recovery in the second half of March, the valuation of the offshore equity market remain extremely low for things that at some stage you have the HSCI trading at less than 5 times the price earning, so it has never been seen in the past. So tactically, we would remain on the offshore, and more strategically speaking, we find that a number of a number of themes that we want to hold, they are mostly on the onshore sectors and on the offshore sector. So longer term, the onshore sector would be preferable.